Hi, good evening, students, and welcome to our first session in financial management. Get towards the June 2020 exams. Now, this paper, which was previously known as F9, and actually F9 was financial management, but the ACCA, as you no doubt are aware, has done away with the numbers and refers to the papers through their formal names, financial management. Now, before we actually get into the coursework itself and the syllabus content and that sort of thing. Just a couple things. Quite a few of you are offline students, which means that you choose to receive the recordings alone. And this is for time differences, usual thing, because some of you all have been with the institution for a few courses well. And usually it's because of your time difference. We have a few students where there's about a 13 hours time difference. So for obvious reasons, some of you all have chosen to do the offline route. Some of you all have chosen to do the online route, which is good because this gives you the advantage of actually a couple of advantages. One, you can actually interact with your tutor as the lecture goes by, whether through the mic or through chat box. Secondly, it actually, for want of a better word, forces you to sit down a certain time and do the lecture with your tutor. What we tend to find is that the offline option is good provided that a student has a certain amount of discipline, because with the offline option, of course, there's always the temptation that a student would have good plans, good intentions, but simply does not get around to commit him or herself to sit down and go through the work. And of course, this, with the online option, this is certainly an advantage. There are a few new students with the offline and a couple with the online as well. And just to introduce myself, I am the Director of Studies of Zircon Tuition. I've been an ACCA lecturer for about 30 years now, and most of my lecturing experience was face to face. That about 25 years of them. And apart from that, many. I have many online certifications, online study certifications with the university, with at the Lockjack School of Business and whatnot. So these are some of the things that actually prompted me to start this institution. So you're in good hands when it comes to that. Now we have our own unique approach to doing things. Um, as I indicated to you all in the past, I think in the email which I may have sent out today, the lectures would be put up in the Google Classroom, and all our lectures are normally formally put up in the Google Classroom. And the Google Classroom enables you will receive an invitation to join the Google Classroom. And what that is about, for those of you all who are unaware of it, okay, it enables you, as long as you've got a smartphone or tablet or laptop or desktop, it enables you to access your lectures anywhere, anytime, 24/7, literally. Okay, so you may not actually have your handouts with you. If you choose to do the good thing and preserve the environment and avoid printing a lot of paper handouts, you can always access your handouts. Whatever material has been given to you will be in the Google Classroom. There are certain things which may not be there if you are given a test, an exam. The exam may not be there, but the class material, technical articles, lectures, and whatever other material you need to learn, okay, would be included and put up in the Google Classroom. So you should have that by tomorrow, where you'll be able to access it for the FM. Each subject has its own classroom. So a student doing FM would not be able to access a student, say, doing tax or doing advanced financial management, unless the student, of course, is doing several papers. But each course has its own classroom. Apart from that, we also have our own study plan, which was devised by me I think I sent it off to you today. Okay, and this is again unique to our institution. It's a study approach which I put together myself based on my experience and what I think a student needs in order to get to the exam. However, of course, I may have good intentions, and even a student may have good intentions, but unless the student actually puts the study plan into practice and into effect, it remains exactly that, just a plan on paper. So it is important that you do commit yourself. The FM papers I will show you shortly when we take a quick look at the syllabus is a very detailed paper. Okay, it's not a paper I would suggest that a student should do on their own at all because it has quite a bit of technical work in it that needs to be explained. And that, okay, being in mind, it means that it is absolutely necessary for you to have a formalized study plan. And of course, not only for this paper, for any paper as well. This plan is for any of the papers which a student is doing. Now, the thing with this plan is that it calls for more work up front and far less work at the end. What we found is that students, and from ever since, I mean, students do it at the university, the ACCA students do it, all a lot of students tend to do it. That they tend to leave all the work for the end. So you will see students in the last few weeks and whatnot, literally trying to turn night into day, okay, trying to get all the work done. And that may work for certain courses, but it does not generally work for ACCA courses. I mean, you may be one of the lucky ones. It may have worked for you in the past, but I would not suggest that you chance that and make that something that a habit that you intend to pursue. Um, what I did as a student is exactly what I'm showing you here. Okay, where you pace yourself up front, do the work gradually, and come exam time, you have literally covered all the work, and you simply put in the ice cream on the cake, the icing on the cake, as they say. Now, it's um, it's done if it's followed in order to ensure that because of the fact that the work is being continuously learned, it means that the acid test here is this: at any time an exam is given to you, you should be able to do that exam. Now, I'm not saying that's what I'm going to do, just give you an exam without prior warning. But what happened, okay, in my situation, which is actually what caused me to do something like this years ago, is that when I attended full-time classes in the UK, in those days, there were no classes offering ACC in the Caribbean. And when I attended ACCA classes, that was way back in 1986, the lecturers, okay, what they would do is just walk into class and give you a test. No prior warning whatsoever. You just be given an exam. Literally, it was random. And I started at level one. Level one had 5 subjects in those days. And of course, you had to do, by the way, only 5 subjects in one sitting. You had to attempt them all in one sitting. If you failed one or so, you were allowed a small margin, okay, in order to pass it back, or else you had to do back all your papers. So it was absolutely crucial then that a study plan was in order. And so lecturers would come in and give you an exam anytime. Now, after the first couple of times, I thought, this is not going to do because I was from the traditional school, okay, which is where we revise at the end. So I devised this plan, and this is what, okay, I have here. If you were to follow it, you'll stand a very good chance of passing the exam. Notice here, okay, you will need to do a timetable and allocate a minimum of 6 hours a week. And that's per course, by the way. And that's a minimum. So which means if you're doing 2 courses, it'll be a minimum of 12 hours a week. Now that's not much actually. I mean, a week has 168 hours in it. So when you look at it that way, 6 hours is really quite a small amount. Okay, it's not even 10%. And this is a minimum. So ideally, you should do more than this. Notice, ideally, it should be more. It can be allocated to suit your daily schedule, but a set time is preferable. Meaning that some students, because of how they work and other obligations, it's not as though they may be able to sit down for um, 3 hours every day at a fixed time and do their studies. So the time may be made up in different ways, but it has to be made up. I mean, that is important. Notice after attending a lecture, you should take your time and go through the content. Where progressive questions are embedded into the material, they should be attempted as you progress through the material and not at the end. That's right. In some cases, some of your handouts would contain progressive questions, which are included throughout the handout. And it is important that these questions, unless they are done in class, because quite a few of the embedded questions are done in class, it is important that you attempt these questions as you proceed through the handout and not all at the end. That tends to defeat the purpose because these are foundation type questions which should, you know, strengthen your knowledge base as you proceed through the lecture or through the material. Additional lecture questions will sometimes be sent and these should be attempted after having read the material and after having attempted the lecture questions referred to in 3 above. After you've completed about 3 lectures, you should go through the 3 completed lectures as a revision. Now, this really is the key to the study plan, this paragraph 5. This revision technique should be used throughout the course, but is cumulative. This means after having completed 3, you would revise the 3. After having completed 6, you should revise 6, not just the last 3. This ensures that you do not forget the material and that you are in a constant state of readiness. It also minimizes your revision time at the end since you are constantly learning and revising throughout the term. And this is the key to it, as I said. It takes a lot of work up front, but it minimizes your work at the end. And more importantly, it ensures that you build your knowledge base as you progress. Remember, the ACCA exams are professional exams. The way in which the questions would be set is to ensure that you have covered the syllabus. The fact that the ACCA examiners now have chosen to include multiple choice objective test questions, well, they've been doing that a while now, up to the first 9, well, financial management. The fact that that is so means that the examiners want complete coverage of the syllabus. And this approach would ensure that you do cover the syllabus. It's as simple as that. But I think you would agree it all comes down to you. If you choose to deviate from the plan, I'm not saying you wouldn't pass the exam, but this can be said, okay, to be almost a foolproof plan. I say almost because things can happen even if you follow the plan. Maybe you get ill come exam time. Um, you know, something happens that throws you off. But assuming that those things, okay, are rarities, it means that following the plan should give you a good chance of passing the exam, quite an excellent chance of passing the exam. There's no reason why you should fail it, in other words. Your timetable should cater for this cumulative revision, okay? Now, what I mean by that is this. That does not, this here, after you've completed 3 lectures, you go through the first 3, and after 6, you go through the first 6, and so forth. This does not mean that at that time you are ignoring your normal work. When I say your normal work, questions which you may be given, any other revision which you need to do, all that has to be done, taken into consideration as well. Okay, it's a complete package here. The 3 mock exams would be given at intervals throughout the course. You would be informed about a week before. Now, the problem that we've had with students is this: we offer the mock exams, students simply don't, many times they don't do it. The exams are sent, students don't attempt the exam. We normally ask students, look, would you be doing the exam? And if they say no, the exams are not sent, because it makes no sense having the exam sitting there and the student, just leaves it. If the student chooses to attempt the exam, which of course is what we hope, the student will attempt the exam. The exam will be submitted, okay, via, online. We normally ask the students to do the exams on an Excel format, and the exams are marked, and the reply is given along with the suggested solutions. They're just drifting down a bit. It should be emphasized that in order to give yourself the best chance of success, you must follow my guidance and be prepared to do whatever I request you to on a timely basis. And that also is a very important paragraph, point, I should say, because that is the amount of confidence that I have in this plan. And of course, if another lecturer is using this plan, the same thing applies as well. So that's it. This was sent to you. Please put it into effect starting today or tonight. Now, so let's take a look at what this FM is about. Now, many of the ACCA papers are progressive, and I think this is something that students tend to forget, whether willingly or unwillingly, whether purposely or accidentally. The foundation papers, let's just go back to the old name at level 1. Okay, form the basis for what you do in the second stage. We've got knowledge and we've got skills and so forth. Those are the stages, how they are referred to now. And for example, in the first stage, we've got a management accounting paper, and that forms the basis for what was called FI, performance management. Now, this particular paper, though, there really is no first level paper for this. Some of the material is covered in the management accounting paper in the first stage, very brief. A student is introduced to NPV and all those things. But this paper really, is the foundation paper for the advanced financial management paper, which is an option paper in the final level, the strategic level. So if a student is thinking about choosing that option, the advanced financial management paper, when they get there, it is absolutely necessary that that student fully acquaints, himself or herself with the syllabus content. Of course, even if a student is not considering doing that option, they still need to go through the syllabus, because you need to pass this paper before you can go on. That's very, very important. So financial management, very quickly, let's just move through. It's not my intention here to discuss everything on the syllabus, of course, but there are a few things I'd like to draw to your attention. Okay, now this is the relational diagram, which the ACCA normally includes, in each of its, syllabus. So here you've got management accounting, which is our first stage paper, as I mentioned just now. Some of the things which you learn here, would assist you in this paper. It's not a core foundation paper for the FM though. There are just a few things. Remember, this is management accounting. But some of the material is learned here and is developed further in the FM paper. The core paper that this FM goes into is the AFM paper. There is some overlap with the strategic business leader paper as well. But really, this is it. FM, AFM. Although management accounting has been included here, as I've been saying, there is actually very little content in your MA paper as compared to the FM paper. So really these two are the important things. Okay. Now quite a lot of material which you cover in the FM is not done over in the AFM paper. It may be quickly revised, but there is assumed knowledge. It's similar to the other papers. We've got the audit and assurance paper, which was previously F8. And of course, that is a foundation paper for the advanced audit and assurance paper, AAA. And the tax paper is a feeder paper for the advanced taxation paper. The performance management paper, previously called F5, is a feeder paper for the advanced performance management paper. So they all, are directly related to the final level papers. And just one thing here. What is the aim of the syllabus? The syllabus and study guides designed to help with planning study and to provide detailed information on what could be assessed. The aim of the syllabus is to develop the knowledge and skills expected of a finance manager in relation to investment financing and dividend policy decisions. And as you will see shortly when we get into the main handout, this is what your course is about. These three things: the investment decision, the financing decision, and the dividend decision. Everything else, okay, comes from this. Okay, these paper, these three terms really says it all. Main capabilities, discuss the role and purpose of the FM function. These, of course, are the main syllabus areas. Assess and discuss the impact of the economic environment on FM. Discuss and apply working capital management techniques. Carry out effective investment appraisal. Identify and evaluate alternative sources of business finance. Discuss and apply principles of business and asset valuations. And explain and apply risk management techniques. And these are the areas here. This paper is examined in a similar way to some of the other skills papers, the applied skills papers. Okay, a 3-hour computer-based exam. Now, whilst we're on that matter, the ACCA, okay, on their website, in this case the FM area, they've got sample type exams, computer-based exams, and also videos have been put out. The ACCA have certainly done their bit to ensure that a student knows what the computer-based exams are about. They put out videos on it. There are videos on YouTube. There are videos on the ACCA site itself. They've also put out sample papers, in this case in the F9, and a student should certainly take a look and see what this is about. We would look at a specimen paper shortly, but bear in mind that the only way you can actually get a good simulation is if you actually look at the sample paper. And of course, the online format helps you here, because just about everything you need to do, okay, in the online format is on the computer. So, if you've ever looked at any of the related papers, the computer-based papers, you are provided with calculators. You are provided with, of course, electronic calculator, is embedded into as one of the tools. You are also provided with e-scrap paper, okay, electronic scrap paper for you to do your workings and so forth. And actually, I think it's a lot easier. It's less writing. Some students have horrible handwritings, and their handwriting may have been responsible for failing exams. Okay, at least with this format, you have little problem. Of course, there's the constructive type questions, which are a bit traditional. So we've got here section A, 15 objective test questions, 2 marks each. Section B, similar as I said to the other middle level papers, 3 questions each containing 5 objective test questions plus additional content as per below. And section C, 2 20-mark constructed response questions. The 2 20-mark questions will come mainly from working capital management, investment appraisal, and business finance. The sections A and B can cover any areas. Candidates are provided with a formula sheet and tables of discount and annuity factors. And as I said, okay, an electronic embedded calculator as well. This is your syllabus in outline, and this is your syllabus in detail. And we will be covering the syllabus, not necessarily in the same order as this, but at any time you can actually look back at what we've done and compare it with the syllabus, the study guide in here, and see what has been done. So for example, in today's session, some of the areas are a lot longer than others. This section itself is not too big, section A, okay. The nature and purpose of FM, the relationship between financial management accounting, then financial objectives, relationship between these things, identify and describe a variety of financial objectives, stakeholders, and impact on corporate objectives. Okay. Now, one thing that I don't do upfront, I don't do ratio analysis and all these things. Now, let me just explain that. See, in this section A, okay, is included, notice 3D, describe and apply ways of measuring achievement of corporate objectives, including ratio analysis, such as return on capital employed, return on equity, EPS, and so forth. Changes in dividends and share prices as part of total shareholder return. The reason why I don't, most textbooks, the BPP textbook, the Kaplan textbook, well, those are the main textbooks. In the initial chapter dealing with this, they do in fact go into a bit of these things. I prefer not to, the reason being because you need to know these things in detail. And throughout your course, the ratios are done at the more appropriate times. So for example, when we get to long-term sources of finance, we look at things like return on equity, EPS, earnings yield, and all those sorts of things. When we get to gearing, okay, we look at the gearing ratios. When we get to working capital, we look at the liquidity ratios. So that's why I prefer not to get into them here. There are one or two calculations we do, but by and large it remains for later on in the course. Explain ways to encourage achievement of shareholder objectives. And then section 4, financial and other objectives in NPMOs, okay, value for money and all these things. So this is section A. Whilst it looks fairly detailed, really it's not that bad we compared to some of the other areas. And when I say bad, I don't mean difficult, but as far as the amount of content and technical content. Section A, the first area of the syllabus, is mainly theoretical and discursive. There aren't, many calculations. I mean, except for these things, which I tend, as I said, tend to leave out for now. Okay, there aren't many calculations. Next thing is, this is section A, and it includes all these things. Because section A itself is not a very big section, we may be able to cover this in one or two handouts. But, and section B itself isn't too bad, okay? But when we get to section C, working capital management, now you saw just now in the syllabus, okay, the exam format, one of the objective test questions, one of the constructive type questions, the section C, would test working capital management, one would test investment appraisal. So these are core areas. Section C actually may include about 4 lectures because of the nature of the section, whereas section A may include 1 or 2, if so much. And that's how it is, because this includes both discursive theory type areas as well as computations. Okay. Very detailed areas. You must be examined on this. In fact, in all the areas of your exam, section A, section B, section C, you will be tested on these things. And same thing with investment appraisal. Okay. So this is the syllabus, quite a big syllabus. Okay, and that's why I said it's absolutely important that you do your work from day one and not leave it for the end. I don't see how a student can expect to leave this for the end, okay, and then expect to pass the exam. I mean, that student must be specially gifted to to achieve that goal. The goal of passing the exam, that is, having left everything for the end. Because if I was a student, I couldn't do that. Leave everything here for the end and then expect to learn it. Yes. So unless any of you all there are specially gifted and you can see the future and you know you will pass regardless, I would not suggest that you leave it for the end at all. Right. So this is the syllabus. Now, let me just close this off. Now this is, I have here, okay, some, again, I send this to you, specimen exam, okay. See, section A, 15, section B, section C. And this is your section A. Of course, this is the paper format, but it's the same thing as the computer format. It's just that the questions are computer based, and the way in which you answer them would be also computer based. Now notice, if you were to go through section A and B questions, you realize that the questions cover almost the entire syllabus. This, for example, deals with risk management, the last section, okay? You need to know how to calculate exchange rates and apply things called the purchasing power parity theory and interest rate parity theory and so forth, okay? So, this, as I said, is what your exam would look like, except it will be on a computer-based format. See, very broad. Okay. I can go through this and tell you what section each of these questions come from. When I mean what section, A, B, C, D, and so forth. And if I had to do that, I would actually touch on all of the sections, because these questions, they are like that. And let me just move forward quickly. Right, this is your section B, typical. The examiner gives you a mini, very, very mini scenario and asks you 5 questions on it, which, okay. So this is 1, 2, 3, 4, 5. And then another scenario and 5 questions on it. Then a third, sorry. Yeah, this 3 of them. Okay. And then these are the constructive type questions. Okay, this is an investment appraisal question. Remember, you were told that one of the questions, okay, one of the constructive type questions will be on investment appraisal. That's this one here. And this one, okay, is on long-term sources of finance, gearing, and business valuation, and so forth. You were told that as well, that one of the section C questions would include, business valuations. The examiner will try to get maximum coverage. So you may find, for example, one, either um, the first or the second section C questions, or indeed both of them, include in multiple areas: investment appraisal, working capital, business valuations. But that helps, because it helps to go through and see what the examiner would test in section C, which means those are the areas which are tested there. Now, what that means is this: if you were to, this is 20 marks each. So if you were to master those areas, because you say to yourself, I know the examiner will test these areas in section C as evidence in the syllabus, okay, that we looked at a few minutes ago. I will learn these areas thoroughly. And let's assume that in a question like this, you were to pull about, say, 16 marks. And then in the other one, you were to do the same thing. Now that's 32 marks there. And that is achievable because you know that the examiner is testing, okay, bringing these two questions from three main areas. So you make sure and learn those three main areas well. So if you can pull 32 marks on the last two questions, because you really covered those areas well, you've done a lot of practice question, then really you're just looking for 18 more. Now, of course, I always advise students, you don't aim for 50, you aim for a lot more, in case things don't go the way in which you've planned it out. But that's it, it's a numbers thing. 32 marks there, you're looking for 18. Okay, you do pretty good in the multiple choice, or even average in the multiple choice, or even not so good, 18 marks. That's it. Okay. So this is your sample, and it was sent to you, but as I said, this is a hard copy. And okay, so this is our study approach. I'll just close this off. Now, this is also a very important um, document, because what I've got here is I pulled all these web links from the ACCA's website, the FM section. And of course, this is to save you time. You can go straight to the relevant sections, click on this, examiners reports, the CBE videos. I told you there are videos which have been put out on the computer-based exam format. Okay. The specimen CBE exam, technical articles, very, very important. I would be putting up the technical articles in the Google Classroom as we go on, as it relates to the different areas. But of course, you can feel free to visit the sections. Let's just take a look at something here. Okay, so this is the examiner's report. Just take a look at what this involves. It's amazing the amount of information which is included on the ACCA website as an aid to students. And it's also amazing that many students do not actually make use of them. Yeah, hold it with you. Keep it there. If you call your answers, put it back. Yeah, sorry about that. Yeah, so should have come up by now. Oh, okay. Let's see. Right. Let's see what happens here. So all of these web links you should visit. Okay, you should follow them because, as I said, they are all from the ACCA's website. I don't know why this is taking so long to come up. Okay. Why it is? loading. As I said, it's highly unusual. It would take so long to load. I don't know what's happening. Right. So please ensure that you visit the different links. Take a look at the CBE videos, especially F9. Notice and the exam. This is now just now we looked at a typical paper-based format of the exam, which you will be examined on, except your formats will be computer-based. But here, okay, you can actually, as I said, there are specimen exams for you to go through, okay, on the ACCA website. And of course, your technical articles always very, very important. All right, so here it is. Now, let's just take a quick look at this video, okay, and take a quick listen. Of course, what you also do is you have to go through some of these reports, because when you go through the reports, although these reports related to past exams, what you realize is that many of the mistakes that students make and continue to make, okay, the examiner would obviously talk about it. So forewarned is forearmed. If you know of the mistakes and you know what students do, and you also know what the examiners expect, then you, of course, do the right thing. And this is why these reports are so important. It's amazing, though, that many students, they choose not to actually, okay, take a look at these things. But these things are so important. Okay, please go through them. Let's just take a quick look at what this is about. See, the examiner's reports are an essential study resource. Read them to learn about mistakes that students commonly make in exams and how to avoid them. The guidance articles and videos set out the general approach to the syllabus in the exam and provide tips on how to improve your exam performance. So let me just put in here, okay, here it is as I click on it. All right, so let's take a look.
Hello and welcome to this session on the F9 exam. I am the Qualifications Technical Advisor for F9. From a relational point of view, F9 builds on knowledge gained through studying F2 Management Accounting. If you are exempt from F2, you should ensure that you are familiar with the content of the exam by referring to its syllabus and study guide. The knowledge from F9 is built upon further if you choose to take the Advanced Financial Management option at the professional level. The F9 exam consists of 3 sections, A, B and C. There are 15 2-mark objective test questions in Section A. Section B contains 3 10-mark objective test cases, which each have a common scenario with 5 2-mark objective test questions. There are longer constructed response questions in Section C. Sections A and B draw from all parts of the F9 syllabus, and everything is examinable. Here is some advice on tackling sections A and B of the exam. No questions in section A or B should be unanswered. If you are unsure, you should be able to make an educated guess for every question. Objective test questions are automatically marked, and you will either score 2 marks if you get the question right, or 0 if you get it wrong. In section C, there are 2 constructed response questions, both worth 20 marks, which is 40% of the overall marks. Section C is human marked. The markers follow the own figure rule, so that if you made an error in your calculations, the error is penalised only once. The marker will follow your answer through to your logical conclusion and award marks accordingly. The 20-mark questions will mainly focus on 2 of the working capital management, investment appraisal and business finance sections of the syllabus, but may also include other areas of the syllabus as well. The balance of narrative and calculation marks in the future will remain broadly similar to the past exams. Each exam will contain tables of discount factors and annuity factors together with a formulae sheet, as in the specimen exam. You must ensure that you are familiar with the formulae given in the formulae sheets and know how to use the discount and annuity factor tables accurately. There are a number of points relating to F9 which are important for you. I want to emphasize 5 of them. First, it is essential to study the whole syllabus, and the format of the F9 examination highlights this. You can be asked questions relating to any part of the syllabus. Second, it is essential to study past examination questions. The saying "practice makes perfect" is true, even where the format of the questions may be different from those currently used in the F9 exam. Approved content provider question banks have plenty of questions for you to practice on. These are full of past exam questions that have been adapted to the current format of the F9 exam. Third, you should show your workings, label them, and set them out clearly. This is particularly important in the longer working capital, cost of capital, and MPV calculations. Otherwise, marks may be lost if a marker is unable to follow what you have done. A key skill in the exam is time management. By practicing questions to time, you will give yourself the best chance of completing the exam within the time allowed. Be strict here. Once your allocated time for the available marks has passed, you should move on to the next question or requirement. You need to get into the habit of answering both calculation and narrative questions in the length of time that you would have available in the exam. It is also important to plan your answers to discussion questions. This should help you to avoid writing too much for the marks offered. In any examination, it is essential to read the question requirement carefully and to understand clearly what you are being asked to do. In each sitting, there are some candidates who do not do this, and as a result include irrelevant material which scores few, if any, marks. Ensure that you are answering the question which has been asked and not writing everything you know about a topic in your answer. Thank you for watching this F9 presentation. I hope you have found this information useful, and I wish you the best of luck with your F9 exam.
Now, of course, there are more videos as well seen here that you can visit and take a look at. Now, there's something here that the presenter said, which no doubt you are aware, but sometimes it's often forgotten. You know, a student can have knowledge of the entire syllabus and still fail the exam. The reason being because that student did not practice time management. See, it takes two things, two main components to pass the exam: exam technique and knowledge. And you need to have both. And if you've got the knowledge but your exam technique is poor, okay, think of it like this: it's a multiplication formula. Now, 2 times 2 is 4, but 0 times 2 is 0. So it means, therefore, that if you've got the exam, if you've got the knowledge, but your technique is abysmal, there's a good chance that you can still fail the exam. Now, hardly likely that you can have really good exam technique and no knowledge, because, I mean, you know, obviously you must have some knowledge to have good exam technique. Exam technique would include things like time management, having a proper study plan, and all these sort of things. When you are practicing questions, see what tends to happen with students is this: when a student is practicing past exam questions, okay, they may get all the questions, but a question, let's say a multiple choice question worth only 2 marks, a student may take 8 minutes to work out that. And then the student says to himself, oh, well, I got all that, let me move on to the next one. But that's bad. I mean, it's good that the question, okay, the problem was solved, but look at the time. So time management is absolutely crucial, and you need to work on your time, okay? Just as how you will work on your knowledge, you need to work on your time management. That's very, very important, okay? For Section A question, Section B, and Section C, you need to work on your time. You need to ensure that you do not leave out any part of any question. Section A, Section B, as the presenter said, okay, if you're stuck with a part, with an objective test question, at least make an attempt, make a guess, then an educated guess. With the Section C questions, which should typically have parts to them, like part 1, 2, 3, 4, 5, say, you should attempt every part. If you attempt every part of every question, and indeed with the objective test questions, all the questions, it's highly unlikely that you'll fail the exam. Yes. because you've done it 100%. You may not get everything right, but let's face it, it's easier to get 50 from a complete attempt than 50 from a half attempt. Okay. If you were to leave out a 20-marker question, it means obviously you're being marked out of 80. And it's more difficult to get 50 out of 80 as compared to 50 out of 100. So take those things into consideration, very, very important. And just don't listen to the advice, put them into effect. Listening to the advice alone is not good enough. You need to put the advice into effect. Let it become part of your study plan, embed it in your study plan. You still got quite a few papers to finish ACCA, and whatever mistakes you have made in the past, okay, put that behind you. When I say what I mean is in past papers, and focus on what you're doing now until the end of your ACCA studies. Right, so this was guidance from the examiner, okay, and close this off now. First, make sure and visit all of the links, and now we actually get on, okay, to our the first main topic, okay, financial management and stakeholder analysis. Now this handout, okay, which is quite a long one, we may not complete it all today, because remember it's a section A, and section A includes quite a lot, not as much as maybe section C, but quite a lot. So this handout, okay, gets into section A. It covers many things in section A, and as we go on, we will be looking at some questions, foundation type questions. The questions we'll be looking at as we go on are objective test questions related to the area, not a section C question, because a section C question would not be a dedicated question focusing on the financial management objectives and so forth. Okay, so quite a few nice little questions there. Now, what is financial management about? On the handout here, okay, I've got before the nature of financial management, the course outline, which is actually the syllabus, as we saw just now when we went through the syllabus and study guide. Okay, so we more or less mentioned these things. So what is financial management itself about? Well, you know, we've got financial management and we've got financial accountant. We've got management accountant. Management accountant, financial accountant, financial management. Now let's look at financial management and management accountant. Two separate areas. Management accounting is what you would have covered in your first stage paper, the MA paper, and then in your FI, performance management. Whilst there may be some overlap with management accounting and financial management, they are two separate areas. Now, the examiner expects you to know what are some of the differences between the two areas, and this is something that we'll be looking at shortly as we go through the handout. But back to financial management. What is it about? Well, it's about planning and control in the financial affairs of an organization to ensure the organization achieves its objectives, particularly its financial objectives. Now, as you will see shortly, okay, and as if you recall, when we looked at the study guide a while ago, the examiner expects you to be able to differentiate between financial objectives and non-financial objectives. Now, the difference is quite simple. Financial objectives are normally objectives expressed in financial or monetary terms, whereas non-financial objectives are not usually expressed in financial or monetary terms. So an example of a financial objective would be where the company, okay, hopes to achieve a profit of say 20 million in the coming year, or at least a minimum of 20 million. Now that's a financial objective. An example of a non-financial objective, okay, would be the company hopes to improve the working conditions for its workforce. Now, one thing with those two, ultimately, all non-financial objectives have financial implications. So everything comes back to money. I mean, if you were to look at the non-financial objective, which I used just now, where the objective in the current period, or one of the objectives, is to improve the working conditions, okay, for the workforce. Now that costs money, and management may be thinking about it, and they are discussing it, and one of the board members says, well, you know, that's going to cost about, that program outline will cost about 10 million. So can we actually do it with our limited resources? Then one may say, well, we can, but we may have to scale it down a bit. So you see, again, the deciding factor there, okay, becomes a deciding factor because of money. And that's why I said just now, ultimately, okay, all non-financial objectives have financial implications, you see. But having said that, the examiner expects you to know what are financial and what are non-financial objectives. And this is something that we'll discuss as we go on. As I said, this area, the entire section A, which we looked at just now, is mainly discursive, but it is very, very important. Students sometimes tend to think of the discursive areas as being boring and not that important. Nothing can be further from the truth. You saw for yourself that anything can be examined in section A and B, any part of the syllabus. Now, how would you like to get back your exam script and see you made about 48 marks? And one of the reasons why is because when you recall, you left out a few multiple choice questions that dealt with this area. You just choose not to study it, or you didn't study it properly at all. Yes? So please do not take any of these things for granted. Very, very important. As I said, hopefully as we go through this and look at the questions, you'll be well prepared come the exam. And of course, you will always revise these questions, these progressive questions, which are done as we move on. Now, what you also saw, okay, when we looked at the syllabus and study guide, there are three main financial management decision areas. Whether it be in this paper, financial management, or advanced financial management. See, all financial management decisions are in some way related to the following three areas. The investment decision, what type of short and long-term investment should be undertaken. The financing decision, what types of financing options should be utilized. For example, the investment decision may be management is considering, okay, acquiring a competitor. Or that's an example of a capital investment. That's a long-term investment. The financing decision related to that, okay, would be, well, how should we finance the acquisition? Should we use sources of debt? Should we use equity? Should we use a combination of the two? Should we use debt, equity, and cash as the consideration? You know, things like that. And this is where long-term sources of finance will come into play. Remember, that's one of the areas of your syllabus. And the dividend decision, what type of dividend policy should be adopted by management? Now, you may think to yourself, well, that's not that important, is it? Well, it depends. I mean, if we are dealing with an unincorporated entity, in other words, not a company then, say a partnership or a sole trader type business, the dividend decision may not be that important. Well, there are no dividends then. The partners may pay themselves, okay, salaries and so forth, and take a share of the profits. The sole trader may do the same thing, but there are no dividends as such. But those things may act as surrogates for dividends. In the main, we would be dealing with companies, private limited companies and public limited companies. And especially for a public limited company, dividend policy is important, corporate dividend policy. If shareholders are not receiving dividends, whereas competitors are paying dividends, the shareholders, okay, may be displeased about that, and you know, may even go so far as to sell their shares in the company and maybe invest in competitors. And of course, if shares are continuously sold off, the price of the company shares would fall, and the price of the company shares continue to fall, it means that the company will be ripe for a takeover. And of course, that may not be a good thing. So you've got a diagram here, okay, investment, dividend decision, financing decisions, okay, which you can take a look at. So I gave you an example of the investment decision just now. I use an example of a long-term investment, but as you saw here, okay, what type of short and long-term? Now, bear in mind that all of these things would be considered in lots more detail as we work through the course. For example, in capital investment appraisal and investment appraisal, okay, is a section of the course itself, section C. Working capital management is a section of the course itself. So the investment decision, to operate, all businesses will need finance. And part of the financial manager's role is to ensure this finance is used efficiently and effectively to ensure the organization's objectives are achieved. See, all businesses, in order to do what they would like to, okay, need money, need finance. Now, there are a couple things here. Some businesses may have the finance available to them, but because of poor financial management, the goals of the business are not realized. It all comes down to proper allocation of resources. And this is where the role of the finance manager, okay, may be key. If the finances are not properly allocated, the return, okay, to the shareholders would not be maximized. If the resources are properly and efficiently and effectively allocated, the returns to the shareholders would be quite attractive. And of course, this is what both the shareholders and the managers want. So this can be further broken down into two elements: investment appraisal, which considers the long-term plans of the business and identifies the right projects to adopt to ensure financial objectives are met. The projects undertaken will nearly always involve purchase of non-current assets at the start of the process. Now, investment appraisal itself, okay, as you saw there, normally considers long-term plans. So when we speak of investment appraisal there, usually when the term is used loosely like that, one tends to think of capital investment appraisal, which, you know, is a long-term decision. For a business to be successful, though, as well as identifying and implementing potentially successful projects, it must survive day to day. Working capital management is concerned with the management of liquidity, ensuring debts are collected, inventory levels are kept at the minimum level compatible with efficient production, cash balances are invested appropriately, and payables are paid on a timely basis. Working capital management is a key area of the syllabus as well. And you may recall when we looked at it a while ago, I told you that there may be 4 or 5 lectures on working capital management. It's a huge area. There's where we need to consider the different elements of working capital separately: inventory management, receivables management, cash management, creditors management, the key areas, and of course, working capital policies in general. Now, I said a few minutes ago that a company may have lots of cash, lots of resources, but if the resources are not properly allocated, okay, then the business would not be as successful as it ought to be. Working capital management is mainly concerned with liquidity management, ensuring on a day-to-day basis that the company's cash flow and liquidity is up to par. You know, you may have heard a company can survive making losses for a couple of years. So, for example, year one, there's a loss, a net loss. And year two, there's also a net loss. But the company has cash flow, it has cash. Remember, profit is affected by different things. But a company cannot survive perhaps even half a year without having ample cash resources. Cash is needed on a day-to-day basis to do different things. For example, cash is needed to pay salaries. If a company cannot pay salaries, the employees would obviously leave. No employee is going to work for 6 months or even 2 months without being paid. So this is where working capital management comes in, because working capital management focuses mainly on the management of liquidity and day-to-day liquidity. Let me give you an example. I remember years ago, okay, when I worked for this business. That was before I went to study ACCA. And I mean, I was about at that time maybe 18 or 19 years, okay. And I remember the first thing, okay, I had to do as part of my duties. First thing every morning was to call the bank and find out the bank balance and so forth. Now that may seem a bit, okay, archaic to most of you all, because you may be saying to yourself, but we have online banking, we can just check it online. But remember, in those days there was no internet. I mean, I'm talking about very early 80s, late 70s, that sort of thing. So there was no internet around. So the only way was to find out. Now, I just did it, okay, because it was part of my job specification and I had to do it. I didn't think much of it. I just saw it as a task. But of course, later on, as I, started to get more involved in it, and certainly when I went to study and started doing these things, I realized that what I was doing there was working capital management, ensuring that the company had enough cash on a day-to-day basis. You see, and other things I needed to find out was whether certain checks which were paid out were cashed as yet. Because if I was told by the bank that your company has a bank balance of say $50,000, I'm saying, okay, that's not too bad. But then, okay, I ignore the fact that there's a check which has to come in for $40,000. It means effectively my balance is only 10, which again, of course, is why it's so important from an accounting perspective to do bank reconciliations. Because in my balance, in my cash book, I should be showing the 10,000, not the 50,000. So working capital management is very, very important. As I said, it mainly focuses on liquidity, and this is something we'll be doing in much detail when we get to that section of the syllabus. The financing decision, I use an example just now. Now, although the investment and financing decisions are considered to be two separate decisions, and that is how you actually study them, they are related. I'll tell you what. If a company, an example I used earlier, if a business, okay, has to or is thinking about spending $500,000, okay, in expensive new capital equipment, so it's a long-term capital investment decision because the equipment is expected to last for say about 10 years and of course generate revenue for the company. Let's actually put an example to it. If you when you take your car to have its tires aligned, you see this big alignment machine. Okay, um, one of the brands is Hunter, Hunter. So you may see a Hunter alignment machine. So we've got this alignment company, and they are considering buying a piece of equipment like that. Now I don't know the actual price of those things, but I would expect that they are quite expensive, and they are expected to last a number of years as well. So let's assume that the equipment would cost about, say, $5 million. That's a capital investment decision. And from day one, after it has been, you know, um, implemented and bolted down and so forth as it's ready for work, from day one, the company hopes to start making money out of it. But that investment has to be financed. So, yes, it's all well and good to say, well, you know what, we're going to buy that equipment. It will cost us $5 million. We know customers, many vehicles on the road, customers need to bring in their vehicles to have the wheels aligned and so forth. And we know that this is a good investment. But if the investment cannot be financed, that's it. It remains as a on paper. So management then has to decide, how do we finance that investment? Now, long-term investments, such as capital investments, tend to be financed through long-term sources. Long-term sources for a company would be, say, equity, debt, or anything like that. So that is what the financing decision is about. Just reading, before a business can invest in anything, it needs to have some finance. A key financial management decision is the identification of the most appropriate sources, be it long or short term, taking into account the requirements of the company, likely demands of the investors, and amounts likely to be made available. Now, as I said, they are related. In fact, the financing decision, okay, if there is no finance available, the investment will never take place. But yet, when you study them separately in this course as a FM student. But what I'm saying, when you get to AFM, if you choose to do advanced financial management, you realize that the two decisions must be combined when an investment decision has to be made. And then the third type, dividend decision, having invested wisely, well, hopefully, a business will hopefully be profitable and generate cash. The final key decision for the finance manager is whether to return any of that cash to the owners of the business in the form of dividends, and if so, how much. The alternative is to retain some of the cash in the business where it can be invested again to earn further returns. This decision is therefore closely linked to the financing decision. The decision on the level of dividends to be paid can affect the value of the business as a whole, as well as the ability of the business to raise further finance in future. Now, again, this is something that we also study in more detail later on. But let's try and connect this to some of the other decisions. When looking at the financing decision, think of the financing decision as in the middle somewhere. So on one side, we've got the investment decision. On the other side, we've got the dividend decision. And sitting in the middle is the financing decision. Money is necessary in order to buy capital assets, and money is also necessary in order to pay dividends. A company may actually be profitable, meaning that for the year it shows profit after tax of, say, $20 million. But the company does not have ample cash resources. Remember, profit includes both cash and non-cash items. So if the company does not have cash, regardless of whether it's profitable or highly profitable or not, it obviously cannot pay a dividend. And this is why I said the decision is closely related to the financing decision. Now, many things can be said about the dividend decision, but as I keep saying, we'll consider that at the relevant time and place, okay, later on in your course. The examiner in this area section here also requires you to know, and as I said earlier, do not take any of these things for granted. So what are some of the roles of the finance manager? The finance manager of a firm plays an important role, and some of his responsibilities may include financial analysis and planning, investment decision, financing and capital structure decision, management of financial resources such as working capital, risk management. Now I'm just going through it, okay, and I'm trying to get through it quickly and explain, but of course you will need to go through it in detail, okay, make your little notes on whatever else you need to make. Whilst we're on that, Okay. There's really no need for you to print out the handouts. I mean, it's up to you whether you choose to do it or not. Some students still, stick with this old school type thing and like to walk around with their handouts. But um, the e-format, okay, is, I think, even easier because I don't, no, I don't restrict you. I don't restrict editing of the handouts, but you should not edit my handouts because it's my handouts. And, if you were to go changing things around, that's not ethical at all, especially as a ACCA student. Now, the reason why I don't lock the editing process is because as you read through, you may wish to make certain notes. For example, you may need to make comments. So if you read this, for example, okay, financial analysis and planning, you may want to make an additional little note on the side here, and you may wish to include a comment. Okay. Yeah, comment and add a note or some other form of editing. And that's the same thing as highlighting. Of course, you can also highlight as well if you wish. Okay, and that's up to you. So you can do anything you wish, but what you shouldn't do is change any of the content. As I said, that's not ethical, it's not moral or anything like that, it's just wrong. Okay, so there's really no need for you to print out the handouts and use a highlighter as old school type things as students highlight and whatnot. It is a online program. Even the exams are online CBE, and it all goes in the same way. So financial analysis and planning, investment decision, financing and capital structure decision management of financial resources, risk management. Now, one of the things, again, as you saw on the syllabus section A, you need to compare not just financial management with management accounting, but the three of them here. I mentioned these three terms earlier: financial management, management accounting, and financial accounting. So are they different? Yes, they are. Which is more important? Well, they are all important. They've all got their rules to play. Indeed, the management of an organization may need to take a holistic view of things. Look at these three things holistically rather than separately. But there may be a separate finance manager, a separate management accountant, and a separate financial accountant. So what are they and how are they related? Very briefly, management accounting and financial management are both concerned with the use of resources to achieve a given target. Much of the information used and reported is common to both. Now, management accounting is what you would have studied in your paper previously known as F5, and what you would have studied in the management accounting paper in the first level. But the main difference is the time scales. Financial management is concerned with the long-term raising of finance and the allocation and control of resources. It involves targets or objectives that are generally long-term by nature, whilst management accounting usually operates within a 12-month time horizon. Management accounting is concerned with providing information for the more day-to-day functions of control and decision making. Things that you would have studied in your F5. This will involve budgeting, cost accounting, variance analysis, and evaluation of alternative uses of short-term resources. As I said, okay, all the things which you would have studied at F5. In fact, let me just make a comment here for you. Okay. Now, of course, your handout was sent to you already, but when you view the recording, you will see the comment made, and of course, you can insert the comment yourself. Because, as I said, I do not lock the handouts from editing. So let me just include this. Okay. and I'll put that is areas slash topics studied F5. Okay. Right, performance management. Okay. So all the things I just mentioned a few of them there. Now, financial accounting, on the other hand, of course, you would have studied financial accounting in the first stage paper as well. There's a core accounting paper there, just as how there's a core management accounting paper in level 1. And you would also, for those of you who have finished the F7 financial reporting paper, you would have studied financial accounting there as well. Now, financial accounting is not directly involved in the day-to-day planning, control, and decision-making of an organization. Rather, it is concerned with providing information about the historical results of past plans and decisions. Its purpose is to keep the owner, shareholders, and other interested parties informed of the overall financial position of the business, and it will not be concerned with the detailed information used internally by management, accountants, and finance managers. Of course, the way in which the financial accounting information will be communicated to the users of accounts, the external users such as shareholders, bankers, and investors, and so forth, is via the statement of financial position, previously known as the balance sheet, the statement of profit or loss and other comprehensive income, previously just known as profit and loss statement, and cash flow, statements of cash flow. Okay, so those things, those three, especially the first two, okay, would be the medium through which the information is communicated to the external users. And of course, accounting standards must be adhered to when those accounts are being prepared. And of course, all that comes under financial accounting. Right? The following table illustrates the distinction between some of the tasks carried out by each. Now, as I said, we are not looking at this purely, okay, for academic purposes. We are looking at this because this is part of your syllabus. The examiner expects you to know it. As you saw, everything on this handout, if you were to course cast it back with section A of the syllabus, you will see everything is mentioned there. So just some examples, okay, distinctions, sorry, between some of the tasks. Review of overtime spending, management accounting. Depreciation of non-current assets, financial. Establishing dividend policy, financial management. Evaluating proposed expansion plans, financial management decision. Overheads, management, identifying accruals and prepayments, and so forth. I mean, things that you know, because obviously everybody here, even if you haven't done the F7 paper financial reporting, you would have done the first stage paper. And even if you got exempted from the first stage because you have a first degree, in your degree, you would have done financial accounting as well. Okay, so there you have it. Now, this diagram shows the link between financial management and corporate strategy. Again, in the syllabus and study guide we looked at, we saw that you need to know of this. And the diagram may not make much sense to you at this stage because it does refer and include things that you have to study later on in your course. Okay. The diagram above is key to understanding how financial management fits into overall business strategy. Now, remember, when one hears the term strategy, one thinks of long-term decisions. So the board of directors for a company will normally be concerned with strategic type decisions. Strategic type decisions are decisions which would tend to include, okay, a lot of futuristic type assumptions. The reason being because the board of directors must make decisions which would ensure that the company has a future. And in making such decisions, there would be a need to make estimates because no one knows exactly what the future holds. That's why you would have been taught in the past, and you will be taught as well later on, that strategic type decisions mainly use externally generated information, but may also use internally generated information. But external is perhaps more important, external relating to the environment in which the firm operates. So again, when one comes across the term strategy, one thinks of a long-term scenario. And the above diagram, okay, the diagram above is key to understanding how financial management, which is what we are dealing with in this course, fits into overall business strategy. The business should recognize its overriding purpose or mission and develop broad-based goals for the business to pursue to ensure it fulfills its purpose. I'll give you an example just now. Each goal is then further broken down into detailed commercial and financial objectives, each of which should have appropriate identifiable measurable targets so that progress towards them can be monitored. Now, let's look at a typical, although the purpose of this lecture and indeed the FM course is not to get into strategic planning and decision making and so forth. That's something that you look at a lot more when you do the strategic business leader paper and the advanced performance management paper if you choose to do that as an option. But let's just look at a typical strategic decision. Now, before we go on, I would often post up handouts, okay, or material, I should say, on the Facebook page of Zircon Tuition. And it is in your best interest as a student to visit that Facebook page very often. Because although the articles may mainly be geared towards one paper or another, if it's a paper which you would have finished, then obviously you should be able to follow it quite nicely. It would help you. If it's a paper, if the article or the information posted up relates to some other paper which you haven't done as well, okay, you, of course, that means you should certainly look at it. But the articles, which are usually important news articles taken from certain paid subscription sites that I apply to, okay, as well as on certain unpaid sites, the information would normally apply to all students. It's just that it may be more relevant to certain students doing certain courses. Now, one of the articles which I posted up recently, I think a couple of days ago, okay, had to do with Google. And Google's plan over the next 5 years, okay, is to be number 2 in the area of cloud technology. You know, cloud technology now is a big deal, okay? Information being stored in the cloud as opposed to just all contained on a computer. If the computer crashes, the information is still there. But we all use cloud computing every day, regardless of whether we think so or not. A simple example, okay, is your Gmail. Anything to do with Google, using Google as an example. You know, you've got Google Keep, which is an application of Google where you can store all your notes and so forth. And it's also an offline, it's available offline. I use it a lot. Now, if you have Google Keep, which of course is linked to your email or Gmail account, okay, and if you lose your smartphone or something happens to your laptop or whatever, the information is still there. It's in the cloud. That's a very small example. But cloud technology, which is something studied in a lot more detail in the advanced performance management paper, okay, as well as the strategic business leader paper. Cloud technology is very important. And coming back to Google, Google right now, I think, is 4th or 5th, okay, with amongst the players involved in cloud technology. Some of the players, Amazon is at number 1. I think Microsoft is number 2. and you've got, well, Google down there and a few others. And in a recent statement, okay, the relevant personnel in Google indicated that over the next 5 years, they need to move up, or the goal is to move up to at least a number 2 position, just below Amazon. And also outlined was how they intend to do that. Now, how they intend to do it is more a financial management decision, more AFM type decision that you will meet later on in your course, if you in your program, if you choose to do the advanced financial management option. But in that article is also stated that Google choose to do it, or will do it through a series of acquisitions. You know, a firm can grow in two main ways: organically or through acquisition. And the article therefore was more relevant as to students doing AFM, advanced financial management. But clearly, okay, it is also important for other students as well. And I use the example here in relation to what we were looking at here. So the financial management part of that decision would be, well, okay, Google plans to achieve a number 2 spot in cloud technology, okay, and that's a strategic decision. But how are they going to achieve that? Through acquisition. Now there we are getting to a financial management decision. And then the other side of it is, how are they going to fund the acquisitions? Through cash buyouts, or equity, or cash debt and equity? All those are financial management financing decisions. So that's why I told you that the financial management fits into the overall business strategy. It's a means to an end. In order to achieve the long-term goal, as in Google, okay, financial management has a big part to play, both in the financing decision as well as the investment decision. Okay, so we can go down a bit. Now, this is what we were talking about. Let's just read this. Once objectives and targets are set, the enterprise must then work to achieve them by developing and implementing appropriate strategies. Strategies will be developed at all levels. Now, something that you learn about in your strategic business leader paper, and if you do the advanced performance management paper, the different levels of strategy. Corporate strategy, which concerns the decisions made by senior management about matters such as the particular business the company is in, whether new markets should be entered or whether to withdraw from current. Such decisions often have important financial implications. If, for example, a decision is taken to enter a new market, an existing company in that market could be bought, as Google plans to do, except they are already in the market, but they are simply hoping to expand and increase, okay, their market share through acquisitions. Then business strategy concerns the decisions to be made by the separate strategic business units within the group. Each unit will try to maximize competitive position within its chosen market. Now, you don't need to worry. The examiner is not going to go to town in your paper on corporate business and operational strategy. These, as I said, are mainly strategic business leader and advanced performance management type areas. But of course, you need to know how it fits in. So the examiner can give you a very simple example. It will be quite simple, and ask you if this is an example of a corporate strategy decision or business strategy or operational. And this is why it's important to do these questions as we go on. And this is also why it's important for you to put my study plan into effect, okay, and start studying your work from day one, not putting off. Remember, procrastination is the thief of time. Once an hour is gone, it's gone. Okay, you can't get it back. So set your goals and stick to your study plans. You need to make it up. If you plan to study, let's say, 3 hours on a Wednesday night, but something happens and you couldn't get in those 3 hours, you don't say to yourself, well, okay, I'll just do some more work next week. No, this said week, you need to find an extra time, an extra few hours to put in, because you've got a certain amount of hours minimum that you need to get in each week. And that's important. Okay. See, I am not telling you anything which I didn't do as a student. And, you know, whilst it may sound a bit boastful, okay, I was a good student. I had my plan organized. I had my study hours organized. I never allowed anything to distract me whatsoever. Okay, and trust me, in the UK, there were many distractions. Okay, I stuck to my plan. If I lost any time on a certain day, I made it up, on another day, because I wanted to achieve my goal, finishing my ACCA studies within a certain time and coming back home. So operational strategy concerns how the different functional areas within a strategic business unit plan their operation to satisfy corporate and business strategies being followed. We are, of course, most interested in the decisions facing the finance function. These day-to-day decisions include all aspects of working capital management. Almost all strategies developed by the business will have financial implications. And the finance managers are key. See, that's it, isn't it? There's hardly any area, okay, of strategy, of any decision in the organization that may be taken that does not have some sort of financial management implications. I used an example at the start when I said an example of a non-financial objective is to improve working conditions for the staff. How are you going to do that? At the basic level, it calls for money. The firm wants to be seen, the company wants to be seen as a good CSR company. CSR is very, very important nowadays. How is that to be achieved? The firm wants to improve, okay, it's the view that consumers have of it. They would like to change their image a bit. Maybe they think it's consumers right now, okay, and the community, okay, in general, they don't think much of our company. How do we change their views? So almost everything which may appear to be a non-financial objective and may be actually categorized as a non-financial objective has financial implications. Okay, so now we've got some typical organizational objectives. And notice I've classified them, okay, in these. Financial, very easy. Financial objectives are those which are readily expressed in financial terms. Now, financial terms, by the way, okay, would normally be monetary term, but can also include, expressed in, say, figures then. Directly expressed that way. So revenue growth, profit maximization, dividend, share price, EPS, cash flows, cost reduction. Non-financial, diversification policies, survival policies, employee welfare, product service and quality, environmental protection, technological growth. Now, so why do we not use, instead of financial and non-financial, why don't we say primary and secondary? Now, objectives of an organization can also be categorized as primary and secondary. So we can take all of these objectives, and rather than using a classification of financial and non-financial, we may use a classification of primary and secondary. But that's really not a good classification to use. I'll tell you why. Because whenever okay, we meet the term primary as compared to secondary, we would always be partial towards primary, say primary first and always there. So if therefore looking at primary objectives, we would always think, well, these surely must be a lot more important than the secondary objectives. Now that's not necessarily so. Take a look at these objectives here. If you had to categorize these as primary and secondary, you may say, for example, well, surely revenue growth and profit maximization are primary objectives. And then you may say, well, employee welfare, product, service, and quality, for example, those are secondary objectives. And you may think to yourself, well, surely revenue growth and profit maximization is a lot more important than product, service, and quality and employee welfare and things like that. But you may be wrong. Rather, they should be thought of, okay, as operating in synergy with one another. A holistic view should be taken. They are often related. Let's assume that an organization wants to increase its revenue and subsequently, or as a consequence of that, its profits. Now, if currently the service being provided is poor as compared to the service provided by other competitors, okay, the organization may not be able to increase its revenue because consumers simply prefer to buy from competitors because the service is bad. Maybe the quality of the products or services, if it's a service related company, the quality of the service or products being provided to the consumers, those services and products, okay, they're not good. So how do you expect to increase revenue and profits and so forth without focusing on product, service, and quality? They need to go hand in hand. The product, service, and quality, okay, may be the fuel necessary in order to increase the revenue and profit maximization. What about employee welfare? If your employees are not satisfied, okay, or if they're not contented, okay, and if they, on the other hand, very disgruntled and working conditions are bad and so forth, you're not going to be able to see the revenue growth that you wish to see. What about technological growth? We live in a digital world. We live in a digital age. And if the company does not keep abreast with technology and technological growth, okay, it will fail eventually. Competitors would, surpass what this company is doing. So these things should be thought of, the financial and non-financial, okay, as being related to one another and existing, okay, in a synergistic manner. We should look at them in a holistic way rather than attempting to separate them. But the examiner can ask you, what are some examples of financial and non-financial objectives? And he may give you, you'll see, we take a look at a question like that shortly. Now let's just read out this and then we'll go to that short question. It was a multiple choice question. In many cases, financial and non-financial objectives complement one another. And this is how we should look at them in a complementary role. So that whilst non-financial objective may sometimes be less important, this is not always the case. No one can disagree that product, service, and quality are primary importance, since these factors ensure that the firm maintains its competitive position and even improves its position, leading to an increase in revenues and profits. So this is very important. Okay. Now, let's take a look at something I've got here. Right. Now take a look at these three simple questions. Okay. I've got the answers for you, but take about 5 minutes and see if you can answer these three questions. Of course, it's on the screen. I didn't send it to you, but you can just, maybe make a little note. The answer for one is this, the answer for two is whatever. And you will be send the answer subsequently. We'll take a look at it just now. These are typical multiple choice questions which you can be asked, which each one worth about 2 marks. Okay, so in this is an exam standard little exercise. Question 1, in relation to the financial management of a company, which of the following provides the best definitions of a firm's primary financial objective? Now we will be looking at this shortly. The firm's, what is assumed to be the firm's most important financial objective, but you should be able to give a correct answer. Then number 2, drag and drop. Of course, you don't need to do that. You just make a little note in your notepad or computer at home. Drag and drop to indicate whether the following objectives are financial or non-financial objectives of a company. And which 3 of the following are the main types of decision facing the finance manager? So take about maybe, well, not even 5 minutes, say 3-4 minutes, and see what you can come up with, and then we'll just go through it. Whilst you're doing that, I'll just temporarily pause the recording so as not to leave any blanks in the recording. Okay, so let's see how you did. Now, 3 fairly straightforward questions, but as I said, each worth about 2 marks in the exam. So you're looking at about 6 marks in total, and using the time, per mark ratio, that can be about maybe 10 minutes or a little bit more than that, right? But clearly, these 3. Now, whilst we're on this issue, bear in mind something. If you are looking at a section A, where you've got 15 objective test questions to answer, each worth 2 marks, some of the questions you would be able to answer fairly quickly because they are easy questions, whereas others would be more difficult. There's no need to spend the same time, therefore, on each question. You may be able to answer a question in 30 seconds. Of course, you should read it through, ensure that you're not making an obvious error. Okay. Whereas another one may take you more than 3 minutes. So the time that you save on one can go, towards answering one which is, a bit more difficult. So just bear that in mind. Okay. So in relation to the financial management of a company, which of the following provides the best definition? Now, if you were not clear about this, you'll certainly see it discussed now as we go back to the main handout. In financial management, it is normally assumed that the firm's most important financial management objective is maximizing the wealth of its shareholders. Now, how that may be achieved, the pros and cons of that and so forth, we'll discuss, as I said just now, when we return to the handout. You may be saying to yourself, but, and many students may actually have put the answer as D. But D is not right, because as I will discuss shortly, the most important measure of a company's achievement, especially where it is assumed that company is quoted on a stock market, which is the assumption being made here. The most important, measure of achievement is the share price. But we'll get to that shortly. And hopefully, if you did put profits, you'll see why the answer was C, not D. Drag and drop to indicate whether the following objectives are financial or non-financial. This is a fairly straightforward one. You were told here statements 2, 3, and 5 are financial. We saw this just now on the handout. Earnings growth, sales revenue growth, and achieving a target level of return on capital employed. Maximization of market share, achievement, achieving a target level of customer satisfaction are normally seen as non-financial objectives. The reason being because maximization of market share is a rather vague, okay, term. How do you know that? And certainly achieving a target level of customer satisfaction will be non-financial. But, but, and I want to emphasize this, I've been saying throughout that ultimately all objectives which are seen as non-financial have financial implications. How do you achieve a target level of customer satisfaction? Maybe right now, okay, using some measure, you realize that customers, their level of satisfaction is not what it ought to be, it's lower than. And the company may be aiming towards increasing this. How is this going to be achieved? Money has to be spent. You're not going to dream about it and, suddenly customers would improve their rating of the company via satisfaction levels. Money has to be spent in some way, shape, or form. And then number three, well, this was fairly straightforward. Which three of the following are the main types of decision? Of course, we've been saying this over and over: investment, dividend, and financing. Okay. So this I will send to you. Well, this entire spreadsheet would be sent to you. Okay. Now, so let's look at the shareholder wealth maximization. The bit on top first, financial objectives. Shareholder wealth maximization is a fundamental principle of financial management. Many other objectives are also suggested for companies, including profit maximization, growth, market share, social responsibilities. Now, social responsibilities may be seen as non-financial. Okay, that's why we said many other objectives are also suggested. Now, just now in the multiple choice quiz, the 3-question quiz, I told you that students may have given, okay, the answer as profit maximization, but the answer should be shareholder wealth maximization. Why is this so? Now, it is very important that you realize it is normally assumed that the most important financial management objective for a company is shareholder wealth maximization. That being said, the more relevant question, or the resultant question, well, how do we achieve that? How do we know whether shareholders' wealth is going up, coming down, remaining the same, that sort of thing? We must be able to measure it. And furthermore, can we actually say with precision that the shareholders' wealth is being maximized? Now, when we hear of the term maximize, we think the highest possible. But how do we know that? Well, as you will see shortly, although the term maximize is used, maximization, rather than saying shareholder wealth maximization, so rather than saying, for example, that the director should aim to maximize the wealth of the shareholders, what we ought to be saying is the directors should aim towards doing what is in the best interest of the shareholders. Because it's just not possible to put a measure on maximization unless a company says that the maximum amount of profits that a company can make, or the maximum share price that we can see is $10, and therefore we'll aim towards that. But that does not sound reasonable at all, because a share price, again, as you will see, can go up or down because of factors outside the control of management. But all those things we'll be talking about as we go on into the course. So it is normally assumed that the most important financial management objective is maximization of shareholder wealth. Now I'll break down that shortly in a few lines following. However, this is not always the case in practice, as the directors of the business must implement policies aimed at satisfying other stakeholders also. Remember, as you will see later on in this handout, there are various stakeholders in a company. Shareholders may be considered to be the most important ones, since it's their funds that initially set up the company. But the other stakeholders must be taken into account. Investors, loan stock investors, okay, who have loaned money to the company, bankers, employees, all of these are stakeholders, the community at large. And the directors of the company must ensure that policies implemented satisfy these other stakeholders as well. Let's consider this for a minute, right? Now, let's look at a typical profit and loss statement. In a typical profit and loss statement, where do the shareholders feature? Where do you see them in a profit and loss statement? Well, the most direct answer to that might be dividends. After the profit after tax figure has been calculated, the profit after tax can then be distributed as dividends or retained, or of course a bit of both. But look at where the profit after tax comes, right down at the end. So you may say no profit after tax, no dividends. Of course, dividends can be paid from reserves, provided the company has cash. But generally, a company cannot continue to operate with a loss and expect to pay dividends. So the shareholders feature right down at the bottom of the profit and loss statement, after the profit after tax figure has been calculated. But what about throughout the profit and loss statement? Well, there's where we see, okay, the interests of the other stakeholders being featured. What I mean by that is this: an important category of stakeholders, okay, an important category is the loan stock investors. People who have loaned money to the company. Maybe the company issued debenture stock. These investors purchase the debenture stock and they expect to get their interest paid to them on an annual basis or semi-annual basis, as the case would be. So interest payments feature above, okay, in the profit and loss statement. What about employees? Employees are also stakeholders. Employees are paid salaries and wages, and that also features above in the profit and loss statement. What about suppliers? When purchases are made, suppliers feature there. Suppliers are also stakeholders. So it seems that all stakeholders, apart from shareholders, feature in the top part of the profit and loss statement. And that's why it is important that the directors consider and indeed implement policies aimed at satisfying the other stakeholders also. Now, I used a term a while back when I said that rather than saying shareholder wealth maximization, we may say that directors should implement policies which aim to do what is in the best interest of the shareholders. What is in the best interest of the shareholders is ensuring that the other stakeholders are satisfied. Because if the other stakeholders are not satisfied, the shareholders may not receive anything at all. Let me use an example. Let's assume that the company does not pay its salaries and wages to the employees. Or the directors, okay, let's take it from the top. The directors at the start of the year, they've made an announcement. And the announcement goes like this: for the coming year, we're not going to pay any interest on our loans. For the coming year, we're not going to pay our suppliers any money. We're going to ask them to sell us on credit for the entire year, sell to the firm on credit for the entire year. For the coming year, we're going to ask you employees to work for free. We're not going to pay you any salaries at all for the coming year. We'll go to the utilities, the electricity and water and so forth, companies, and we'll say, for the coming year, guys, we're not going to pay you all anything. We would like you all to give us credit on these utilities for the year. In other words, nothing is going to be paid to any stakeholder at all. And the reason for that is because the directors, when questioned, they say, look, the reason why we're not going to pay any of those things is because we want to have enough money left over to pay big dividends to the shareholders. Now, a bit of a far-fetched policy and indeed unrealistic, to say the least. But the point being made is this. That policy wouldn't work. Now, shareholders, take employees. Employees wouldn't work for a year for free. They may not work a few months for free. So the employees would walk off the job. The loan stock investors, okay, would move to exercise their right, okay, to liquidate the assets which were pledged as security. The utility companies would cut off the services provided. Customer suppliers would not supply any further products and services at all. So those things would ensure that the company would close up. It would, need to be liquidated. And the point being made, therefore, is that all these other stakeholders must be satisfied before the shareholders are dealt with. And that's why we say, rather than using the term shareholder wealth maximization and directors moving to maximize the wealth of shareholders, directors really should aim to do what is in the best interest of the shareholders, and doing what is in the best interest of the shareholders means satisfying the other stakeholders also. And that's important. Now, we still have to consider the difference between shareholder wealth maximization and profit maximization, and I'll talk to you about that in a little while. But just reading on, the end result is the use of policies which aim to satisfy rather than maximize. This should amount to acting in the best interest of the shareholders, since the other stakeholders must be satisfied in order to ensure that the company continues to exist. The wealth of the shareholders, and this is important, the wealth of the shareholders includes two important measures: dividend income, capital appreciation. Now, if you are a shareholder and you own shares in this company, and the company is a quoted company, meaning that the share price or the shares are quoted on a stock exchange, there are two important reasons why you choose to invest in equity, traded equity, rather than say a bank deposit. One is because equity investments give you the opportunity to gain financially in two ways. One, by receiving income, dividend, and two, by receiving capital appreciation and the rewards associated with that. Capital appreciation refers to increases in share price. So for example, let's say for the year just ended, you as a shareholder, you received 20 cents dividend on every share that you had, and maybe you owned about 10,000 shares, so you received about 2,000 dividends, which is a fairly good return. But you also realize that you gained a lot more, because at the start of the year, the price of the company share was $5, and at the close of business end of the year, the price had risen to $8. So you actually had a $3 capital appreciation. And the full gain, therefore, throughout the year in monetary terms, okay, would have been the $3 plus the 20 cents, $3.20. And if you own 10,000 shares, That would have been 3,200. So in measuring the wealth of shareholders and determining whether the wealth of the shareholders, whether the wealth is going up, going down, or remaining the same, the two measures which I use, dividend and capital. Now in our next class, okay, I'll show you how that is actually calculated, because I just want to get on with a bit of this discussion. This is actually the first calculation that you'll encounter in the course, and it's a very important one. It's something which can be tested in a multiple choice as well as part of a section C type question. And that's why I don't want to rush it through. I wish to discuss it with you thoroughly. Profit maximization, right. Now, just now when we looked at the multiple choice quiz, as I said, some students would have put the main objective is profit maximization. And I told you that for a quoted company, shareholder wealth maximization is more important than profit maximization. Now, shareholder wealth takes into consideration dividend income and capital growth, share price then. And perhaps the more important of those two is capital appreciation. See, dividend may not change a lot each year, year in, year out. Capital appreciation can change overnight or can be seen overnight. At the start, okay, of the day, the price of the share was $3. And at the end, it was trading at $5. What caused this huge phenomenal growth over a day? Just about everything that the company does is taken into account in the share price. So, for example, the directors may have announced that in a few months' time they plan to launch a new product, and this product will be a market leader. Price goes up. Price goes up because of the laws of demand and supply, as with the price of any commodity. Existing shareholders rush to increase their shareholdings, and non-existent shareholders rush to buy shares in the company. And there's a heavy demand for these shares, and the price therefore rises. So it goes from $5 to $8. Next day, company announces that the CEO of the company is stepping down because of some fraud that the Securities and Exchange Commission picked up that he was involved in. Price of the share goes from $8 to $2. Because although there can be capital appreciation, there can also be capital depreciation. But the capital appreciation element is often considered to be a lot more important to shareholders than the dividend income element, because of the potential for huge capital growth. So coming back to this issue of profit versus share price, let's just read on and I'll explain. Profit maximization. In financial management, we assume that the objective of the business is to maximize shareholder wealth. This is not necessarily the same as maximizing profit. Firms often find that share prices bear little relationship to reported profit figures. Example, biotechnology companies and other new economy ventures. There are a number of potential problems with adopting an objective of profit maximization, long run versus short run issues. See, in any business, it is possible to boost short run profits at the expense of long term profits. You have an example here. But if the directors of a company take a myopic decision, in other words, a decision just by focusing on the short term, the stock exchange will normally see through such a tactic and share prices will fall. When we say the stock exchange, investors who have invested in the shares of the company, shares are quoted on the stock exchange. So the directors may do something just to temporarily boost up the share price. Now, they've got to be careful when doing that, because if the intent was to defraud investors in any way, the directors can be held liable. Quality or risk of earnings. Remember, what we are looking at here is problems of adopting an objective of profit maximization. A business may increase its reported profit by taking a high level of risk. See, profits may go up, but the risk, okay, which accompany the resulting increase in profits may be too high. And since the stock market takes all that into consideration, if the risk is considered to be too high, although the profits may have gone up, the price of the shares may have fallen because investors have realized that the investments were much too risky. And this can actually lead to, well, I don't wish to go to the extreme and say to the demise of the company, but it can certainly affect the company adversely in the year to come. Cash. Accounting profits are just a paper figure. That's right. There are so many non-cash adjustments included in calculating accounting profits. Dividends are paid in cash. So a company may be showing huge profits, but it has no cash. Now, consider this. I'll make the following statement, and this will be further expanded here. The share price of a quoted company may be seen as a sponge that never ever gets saturated. In other words, if you were to take this sponge and use it to soak up water, okay, it would never ever become fully saturated. The share price may be seen as a sponge. The share price will absorb all of the information and all of the results relevant to the company and the shareholders. The profits may not do that, but the share price would. For example, now I used a couple of examples just now. I said if at the start of the day, okay, let's say the start of maybe the first day in the month, the directors make an announcement that in a few months' time they're going to be bringing out a new product which will be a market leader in the industry, some sort of revolutionary product, new product. The price of the shares would rise. If next day an announcement has been made that the CEO of the company is stepping down, that may trigger a fall in the share price of the company as investors become a bit scared off. They say, you know what, this man was doing really good. We don't know what's going to happen now. The uncertainty, okay, is there. And that could actually trigger a sell-off of shares and therefore fall in the share price. If the company increases, if the directors make an announcement, listen to this one. You know, the company's financial year is 31st December. And prior to that, let's say in November or October, the directors, okay, they put out an announcement that goes like this. We expect that for this year, the reported profits would be 20% higher than last year's profit. So last year's profit was 100 million, it'll be 120 million. Price of the share may go up, but the price of the share may also fall. Now, you may be saying to yourself, but how could an announcement of an increase in profits cause the price of the share to fall or result in a fall in the share price? Now this shows you why, I'll answer that question in a minute, but this shows you why share price increase is more important than profit increase. Because, coming back to answering the question, it may be that other competing firms in the industry have shown increases in profits of upwards of 40%. Why is it our company has only shown 20%? That's not good. And that could trigger a sell-off of shares and a fall in the share price. So it seems a bit strange. The announcement of an increase in profits has caused a fall in the share price. But this is merely to show you that there are many other things that need to be taken into consideration. And that's why the share price is a lot more important than the profits. Let's look at the other side of it. The directors have announced that profits for this year will be 20% lower than last year. And with that announcement, an increase in the share price is seen. So how could the announcement that profits will be lower than last year cause an increase in share price? Lower by 20%. Well, it could be that the industry was really badly affected by maybe natural disasters and other things outside the control of the directors. And other competing firms, okay, saw their profits decrease by upwards of 40%. But our company, there would only be a decrease of about 20%. In other words, through the astute management of the company by the directors, our company managed to weather the storm a lot better than other competitors, and that's a plus. So the announcement of a decrease in profits actually saw an increase in the share price, and that again is, to show you and illustrate why that share price is so important. So share price, the most important measure for a quoted company. Profit is a subset of the share price. Everything else is a subset of the share price. And the way in which we measure the wealth of the shareholders, whether it has gone up, remained stable, or gone down, is by considering both changes in the share price and dividends. Now, the dividend may go up by 27. Of course, a company there cannot be a negative dividend. It's either the dividend isn't paid or it is paid. So the dividend last year might have been 15 cents per share. This year, it's 20 cents per share. This year, maybe 10 cents per share. But the fact is, it's a positive figure. Dividends paid for this year, 10 cents or 15 or 20, whatever. But the share price at the start of this year was $5, and at the end of this year was $3. So there has been a capital depreciation. So what we've got is this. We've got positive 20 cents versus negative 200 cents if it went from $5 to $3. And therefore, there was a net fall in the wealth of the shareholders by 180 cents. The 20 positive versus the 200 negative, which is 180 negative, or $1.80 there. The wealth of the shareholder for each share has fallen by $1.80. And this is how we actually measure it. But of course, as I said earlier, we'll do an example the next day. I'll show you how it's done. Now here, this example shows you profit versus shareholder wealth. And it shows you why as I've been discussing, why shareholder wealth maximization is more important and more relevant. Let's just take a read here. There are two examples which you can go through. Profit maximization is basically a single period, or at the most a short-term goal. It is usually interpreted to mean maximization of profits within a given period of time. A firm may maximize its short-term profits at the expense of its long-term profitability. In other words, directors may engage in what we call myopic decision making. They simply focus on the short term and wish to increase the profits in the short term. But what they're doing will actually adversely affect the company's future. In contrast, stockholder wealth maximization is a long-term goal. Since stockholders are interested in future as well as present profits. Wealth maximization is generally preferred because it considers wealth for the long term, risk or uncertainty, the timing of the returns, and stockholder returns, meaning wealth as opposed to profit maximization. Now, you've got two examples here, okay, which you can take a look at, but it's all about 9, okay, so we'll have to stop at this point and continue next year. As I said, we are looking at section A of your syllabus, and don't think that one handout would naturally be covered in one day or in one session if that handout relates to a number of areas in section A. So at this point, okay, as I said, we'll stop. I'll just, put a marker here as I normally do, okay, in red. Right, and next it, as I normally do, I'll put the date, okay, and we, just to summarize, so we got into the course. I took you through the basics, which is what the examiner expects of you, the syllabus content, and some other initial issues. We then started to look at this handout, which deals with a number of different issues, okay, number of different things. It's really the introduction to the course, but very important, highly examinable, as you saw in the 3 little multiple choice questions we did. Your mission should be to go through the handout and the recording as soon as possible. Of course, you'll receive the recording by tonight. Go through the recording as soon as possible. Go through the handout, what has been covered so far. And of course, explore those links on the handout, which, the handout, the Word document, which contains the web links by the ACCA. Take a look at some of them, very useful information, and you should aim to do all that before the next class. Now remember our study plan. Lecture 1, before lecture 2, you need to go through lecture 1 in detail. Handout, any assignment given, video recording. Lecture 2, you will do the same thing. Lecture 3, the same thing. At the end of the 3rd lecture, you'll then go through the first 3. Handout, video if you think necessary. Any questions that you would have done, you revise them. And that's how you will remain, okay, on top of things. So you can look out for the video recording. That should come your way sometime tonight or for the latest tomorrow morning. And you've got your work cut out for you. If you've got your questions, of course, feel free to send them off to me via email or WhatsApp, as the case would be. As you know, I normally respond quite promptly. And that's it for tonight. We'll meet up again. Remember, our next class will be Monday coming. Remember, I told you that for this week is Thursday, but our class from next week will be switched on Monday. Now, along the way, there may be some additional classes to be put in because of the content of the course and the bulk. But of course, you'll be informed before, so you can make the relevant adjustments. Okay, so that's it. Have a good evening, and we'll meet up again next week. Okay, let me just take this chat. Voted. Okay, great. So take care and be good.